The Fed cutting on Wednesday and Jerome Powell pumping the brakes in the press conference were the best thing that could have happened to us in the gold space. Controversial take, isn't it? But doing my homework and having digested now over the last 48 hours what we witnessed on Wednesday, I'm very convinced that this was the right move for us in the gold space. And with that said, hello and welcome to a weekly wrap-up episode here on the Soar Financially YouTube channel. Really appreciate you tuning in. We have lots to talk about this week. Of course, we had the Fed meeting. We had really insightful. I had a great chat with Lobo Tigre about it, just about 30 minutes after the press conference ended. We did a live session to dissect what Jerome Powell really said and what the market impact was. I'm going to recap some of that and share my insights of what I think the Fed has done and what it means for us in our niche here, meaning the gold and silver space, the mining space, and why I think it is the best thing that could have happened to us. I'll elaborate in a few short seconds. As I said, we have a few topics prepared for this weekly wrap-up. We have to talk about the Fed, but also gold and silver. We'll take a look at the charts. What does it mean? How have they reacted? We'll look at some other asset classes, of course, as well. And the GDX GDXJ is being rebalanced tonight. What does that mean? What are the impacts on the mining stocks? Timing, of course, is always interesting, but it happens twice a year. Nothing unusual about it. Update on that as well. There's some other changes happening based on what the GDX is based on, other index it's tracking, and Barrick made a big move, big announcement, or an updated announcement. It was a big announcement, but it wasn't really on my radar screen, so it was a big surprise actually, and the market took it as a surprise as well because they weren't aware of one of the projects they have in their portfolio. And we will take a closer look at what Mark Bristow said at the Denver Gold Forum, but also take a closer look at that project and why did the market react the way it did. As you recall, Barrick is probably one of my hot stock picks here 3 weeks ago, and the stock has delivered. We'll take a look at the share price here together in a second. But before we dive into it, let's take a look at the economic calendar together real quick. Let's take a look at just this week. What did we get delivered? Let me bring this on screen, and let's take a look together real quick. So what happened this week? Not much. Data? Like not much meaning, okay, I'm really not underestimating, but buttering. What's the right term? I'm really not putting enough emphasis, of course, on the Fed meeting. That's what the whole market was concentrated on, was focused on, was the rate decision, and then, of course, the press conference by Jerome Powell. Really interesting how the market reacted to that, and I'll show you some charts in a few short seconds here to see what happened. Let's take a look at this here. So we got the Fed interest rate decisions, the FOMC projections. Of course, we got the summary of the economic projections as well, which was interesting, which we'll dive into in a second as well. And then, of course, the press conference. But before I forget later, and I tend to forget lately at the end, I want to quickly take a look at next week. What can we expect in terms of data? What should we be paying attention to? I think as a highlight here is definitely the chairman, Jerome Powell, speaking next Tuesday. Probably we'll get some more color on the interest rate cut. Hopefully we get some more insights into the inner workings of the Fed. And who was that one dot in the dot plot that said, well, we're going to have a few more bigger cuts here, maybe another 100 basis points by the end of the year. Maybe he'll shed some light on that during that. That's why I think there's quite a bit of interest for that speech. Otherwise, on Thursday, we'll get the GDP number, which Jerome Powell also mentioned in his speech, that the growth is good. Growth is solid. Consensus is expecting 3.3% U.S. growth quarter over quarter, which is a significant jump, of course. And we can always debate whether that's paid for by U.S. government dollars and excessive spending, over $2 trillion already this year in terms of deficit. So deficit spending definitely pushing growth. The question is, what will this number be? Last quarter, maybe we'll open this here real quick and take a look. It's U.S. GDP growth rate. Last quarter was negative 0.5%. Now forecast goes back to 3.3%, which is quite bullish here. And begs the question, like, why should the Fed cut further? Just from a pragmatic point of view. Let's leave it at that. So those are the main points in terms of the economic calendar. Personal income, I think those are interesting data points, but they're not earth-shattering. They won't move the market unless there's a massive breakout to the downside, I believe. So I think we can rule that one out. Let's take a look at some of the economic projections the Fed has put out as part of its release here this week. So change in real GDP, they're expecting GDP to actually increase up to 2027. Unemployment rate, that was a bit of a surprise. They're expecting it to take higher. Official number right now, and that's the government, the BLS number is 4.3%. The Fed actually expects it to go higher, up to 4.5% by the end of the year before it comes back down again. But I didn't hear a explanation like why that should be the case. Like, why should the unemployment number come down again magically? I don't see a big turnaround. Yeah, maybe in correlation with the economic growth that we're seeing one line above 2027 real GDP 1.9%. But quite honestly, I'm missing indications for that to happen. And I don't think a 25 basis point cut warrants any of those projections. So inflation, the Fed, and Mike McKee from Bloomberg asked actually that, and we discussed that with Lobo on Wednesday as well. But 2 years out, it's always 2%. It's always 2% 2 years out. And I made the joke. It reminds me of free beer tomorrow that some of the pubs have hanging on the wall. But tomorrow never arrives, so it's very strange. And we'll have to figure that one out together, and the impact of that as well. But he keeps leaning, and I felt like he flip-flopped a little bit on his tariff impact on the inflation. I can't shake that feeling that he said, well, tariffs are inflationary over a longer period of time. Not all the tariffs hit at the same time. And now it felt like, and I went through the script again, he did say it, but then he pedaled back in the next sentence yet again. The tariffs are just a one-time impact. And we'll have to figure that one out because the U.S. and China are currently meeting in Spain and having their tariff talks. But so far, I'm not very hopeful that we'll get a resolution to that tariff debate yet, or anytime soon, actually. So that's that part. On the Fed, well, let's take a quick look at how the market reacted to the Fed decision as well. Maybe we'll start with I think the most interesting reaction here was from the bond market, quite honestly. I've got the 10-year lined up, but I'd love to show you the 30-year. Let's see if I can find it real quick. The U.S. 30-year. Let me get Y in there as well. U.S. There we go. Because it's ticking up. Everybody expected, well, the Fed is cutting, mortgage rates will come down, but the mortgage rates are based off and priced off the 30-year bond yields, most of them at least. So it's the inverse reaction. And we've discussed this here on the channel before as well, like why the market was so fixated on a Fed cut, because even a small cut, as you can tell, it's exactly what I expected. The bond yields are running the other direction because maybe the market speculated on a bigger cut, and we didn't see it. And the backpedaling by Powell during the press conference didn't help either. Oh, by the way, I wanted to show you, I had something queued here, and let me show that to you as well, what I mean. It's sort of the first 30 seconds of Jerome Powell's press conference here, and let me play that for you real quick.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings.
And that last part is why everything is moving the other direction. We are continuing QT. Yes, we're easing on one end, but we're keeping it tight on the other. I've yet to find more information on what that really means. The last number I heard was, well, we're selling off balance sheet like assets here for $5 billion a month. Which is pretty much a non-factor if you look at the overall balance sheet that the Fed curates here. But that's why the market reacted very euphorically, because yay, Fed cuts plus two more this year, or more two 25 basis point cuts more. That's why the market reacted so euphorically. But then he said this, and that's when the market turned around. That's when this happened. Let's take a look at the 5-day because you can probably see it right around the time the Fed sort of talked about. Let's see, Thursday. There we go. So intraday, that's exactly it. So we had the Fed announcement. Great. 3 more cuts. The 30-year actually drops a little bit. And then the 30-year jumps up because we're getting the 2 cuts. And then we get the press conference. And all of a sudden, this happens, this spike. And that's exactly that half sentence that we're continuing to sell securities on the balance sheet. That's the whole indicator, and that's why I think this is the best thing they could have said coming from the gold angle. And I'm going to show you why here on the gold chart. And let's take a look at the gold chart. I forgot to share the 30-year chart that I was pointing at, but I think you get my point when talking about this. But so let's take a look at the gold chart. So year to date, absolute monster performance. Let's take a look. But I want to highlight 2 things, and let me see if I can use my rudimentary chart and trend line. What do you call them? Drawing skills here. But my point is, we've been in a sideways. Like, I'm not going to show you anything. I'm not a technical analyst here, but my point is, what I want to point out, we've been in a sideways movement here from, April till like now, just recently till like August. We broke out, and I think Jerome Powell gave us the opportunity to consolidate and create this exact same pattern again. We will be moving sideways at least for the next 40 days. Maybe on Tuesday, everything might change if Jerome Powell really changes his tune. From this press conference, which I highly doubt, by the way. But I think we get the opportunity to consolidate, which is very, very healthy. I was just talking with an analyst and a head of capital markets at one of the leading banks here in the mining space, and he agreed this is very healthy. We need to consolidate. We need to let the stocks catch up to those new valuations. Q3 is almost over. We got 10 more days or 11 more days here in Q3, and the average the gold price in dollars is going to be about $250, $300 higher yet again this quarter. Let the valuations adjust. Let everybody catch up and let gold consolidate. If Jerome Powell would have said in the press conference, we're cutting 2 more times this year, absolutely, we are going to do it, which is, by the way, a very dangerous thing to do, then we might be trading at $3,800, $3,900 per ounce already. Although gold might have priced in 2 cuts already. So, but you get my point. Like, we might have overheated. The whole market might have overheated, and the euphoria that we all felt in Beaver Creek or at the mining conferences here over the last 2 weeks might have actually boiled over, which is not good. We want this to be sustainable, and Jerome Powell gave us the opportunity to make it sustainable. We'll see what the charts tell us and what other impacts we'll see from the geopolitical and just macroeconomic front. But I think the opportunity is perfect to consolidate and then yet again create that nice bull flag and break out. That is sort of my forecast, quite honestly, with my very limited technical analysis. But I do see that sort of happening in the chart, and I'm kind of happy that you can already see it a little bit if you look at the monthly chart here on gold as well. Let's take a look at silver. Very similar, of course, year to date, fantastic performance. Perfectly aligned with gold's performance as well, but I do like that we get the opportunity. Silver is a bit more violent. Was a bit more violent. It didn't consolidate as much as gold did. It had some catching up to do. If you look at the gold-silver ratio, we're still at 86.6. It has been coming down, but now we're also seeing it's more or less oscillating here. It's staying within a range. It hasn't really broken down, or it hasn't broken to the downside. Use proper technical terms here. Quick look. I'm happy for silver to consolidate over $42. $42 has been an important resistance level, and $42 ideally is also the new floor when it comes to that. Talking about gold, Mike McClone, he's a Bloomberg journalist. He's a senior commodities analyst over at Bloomberg, has put out some of his analysis. And he says, well, the gold rally is getting scary. He put that out yesterday around noon. He always puts out his commentary on the commodities market. Scary to a degree because the move has been absolutely violent, so I fully agree there. But what I like seeing and what he's been commenting on is that the gold move, that 3,500 used to be resistance, and now it's the new floor, offering a lot of support. And 4,000 might be his next key resistance target. Isn't that great? But please, let's take our time to get there. I don't want to run there tomorrow. Let valuations of the companies catch up. Let us get another great quarter under our belt. Let's see more record operating cash flows, more free cash flows like we've seen last quarter. It's been amazing to read the quarterly reports. Everybody's been reporting records. So next thing here on my agenda is we need to talk about the rebalancing that we're seeing in the GDX and the GDXJ that's happening tonight. I've queued up a quick overview to share with you. Let me just share this tab here. GDX rebalance. I hope you can see this. A lot of additions, weight increases, but also a lot of deletions. Just companies that will be deleted out of the GDX. So there's going to be quite a bit of reshuffling happening tonight. And let me break it down for you because I had to learn about how the GDX does that as well. So at market close, or traders can put in their orders for trade at close up until like 3:45 p.m. Eastern time, 15 minutes before the close, and then they will get matched once the market is closed. Meaning, looking at some of the names that will get deleted, like a Dundee Precious Metals has been on a fantastic run. It has been consolidating ever since this rebalance has been announced as back on September 12th. So you can see that the stock price has consolidated. Some of those stocks, but let me rephrase. In the past, this would have been shocking. Like this would have destroyed mining, or not destroyed. I'm using strong terms here, strong language, but it would have upset the trajectory of many of these companies. But this time around, keep in mind we're in a bull market. We're in a bull market for gold. We're in a bull market for mining stocks. So these stocks will likely see a small dip at the open on Monday. We'll see what the price discovery tells us. I'll see if I can track this over the weekend and try to make it visible on my X feed here at JR Mining Guy. But I'm not expecting too big of an impact, to be honest. And personally, or from the fund perspective, we kept some cash on the sidelines to buy more of some of the positions. Some of the positions we actually hold in the portfolio that will get deleted, and I'm excited about it because we get to buy cheaper. We get to buy a dip because usually those stocks recover right after. It's a GDX. It's a rebalance of an index. It has nothing to do with operations. So we might be able to see in some of those names interesting buying opportunities emerge here on Monday. Let's also take a quick look at the GDXJ. Let's share this tab here real quick. I put this together based on the documents that Market, what are they called again? Market Vector, actually. It's a Vanek company, put out the other day as well. Only a couple deletions in the GDX, or GDXJ, but one prominent addition, Royal Gold, 12 billion market cap company. Always begs the question, GDXJ, is it really a junior index? But you have to keep in mind certain liquidity functions need to be fulfilled to be in there. And I had a quick look with JetGPT this morning just to take a quick look at the valuations in the GDXJ. We have a Fresnillo in there, $21.5 billion, although they're getting deleted, fortunately. So let's scratch that part. That is a list from today. Pan American Silver, 15 billion. Lundin Gold, 15 billion. Alamos, 13 billion. And then we have Evolution Mining at 12 billion. It's not really a junior index, is it? And looking at this, I have one more. Let's see if I can find the tab. I thought I had it open. Here, there it is. Let's take a look here. Just a market cap as percentage of net assets. 55% of stocks are over $5 billion in market cap, so more of a medium cap, if you ask me, index than a junior index. A friend of mine made the joke. It should be the GDX medium, not the GDXJ, right? So that's that on that front. There's one more. Maybe one thing I do want to mention on the GDX rebalance. It used to track against the Arca Gold Bucks index, but that is changing, and it is using now the market vector index, the gold vector index here. Now, that said, let me go back to my notes. We have a few more things, or one last topic I do want to talk with you about, and it's Barrick Gold. As you recall, I made Barrick Gold one of my... I didn't make it a top pick, but I mentioned it as a hot stock here on this weekly wrap-up about 3 weeks ago, and the performance has been absolutely stellar. Let's take a quick look at the chart. I've prepared this one here as well. I mentioned it around August or something. It's just been episode 1 or 2 here. and the stock has moved from about $28.50, let's say $30, to now $41. That's a 33% move, and it has moved this week as well. Mark Bristow presented in Denver at the Denver Gold Forum, and he gave a really positive outlook on the company, and he highlighted one asset that I didn't have on my radar screen, and I don't think the market had it on its radar screen, and that's the Fourmile project in Nevada. They put out a new PEA, an updated PEA on that project, which was press released in conjunction with the presentation in Colorado Springs. And the PEA for Fourmile is astonishing. I have the presentation lined up here as well. Just scroll down to the right slide because I had it on the highlights slide. But it is insane, that project. I'm not sure why I wasn't aware of it. I don't follow the majors too closely. Maybe that's why. But Fourmile is an absolute monster. It is in the Cortez Gold Complex, so it's right next to Cortez, and it's right next to Gold Rush in the heart of Nevada. And the company just, as I said, published an updated PEA, so it's still earlier days. It's not going to come into production anytime soon. First ore is projected maybe at the end of 2029, so there is some time, but the market appreciate the internal growth profile that Mark Bristow was able to highlight here. Let's take a look at the Fourmile PEA update. Okay, resource 2024, fine, nothing too crazy, 7.8 million ounces. But in the presentation, Mark Bristow said that number will double with the next update, which is supposed to happen at the... I thought he was in here. But they're drilling with 20 rigs here, but it's supposed to come by the end of the year, I believe. So that is supposed to happen. And one thing that really stands out, of course, is the grade, even of this older resource. 14.1 grams per ton is an insane grade. That means margin. You don't have, the costs are low. As you can see, cost of sales here, 850 to 900, and the all-in sustaining costs are 650 to 750. But here's the kicker. Average annual production could be between 600 and 750,000 ounces. That is an absolute monster. That is a tier 1 asset, especially since mine life is at 25 years, at over 25 years. And the other kicker is Fourmile. This $1.3 billion in annualized Fourmile EBITDA is based on calculations at 2,580. We're trading at 3,500. We have to get used to a higher gold price environment, folks. We're at 36. We're almost at $3,700 gold. You know what that means? I've done the math here real quick. This is $1.65 billion at $3,500 gold. Not even spot. So the cash flow, the metrics, the economics are absolutely insane, which why I just want to quickly come back to this chart. This has happened here, and just let's show it. Look at the monthly. Mark Bristow presented here on the 16th. That's when the PA came out, and the stock moved over $2, which in itself isn't that much. But the mining sector, as part of the Fed announcement, has just moved sideways, and Barrick has moved up. Absolutely brilliant. Really excited to see that. Really excited to see that played out. Barrick is a 4% portfolio holding in our Commodities resource fund. I'm really excited to see that because that is producing performance. Now, with that said, I think this was a really good overview of what happened this week. I hope you found this you found this very informative and educational. If you did, hit that like and subscribe button. It helps us out tremendously. And let us know what you think of this weekly format. What else should we be covering? It feels like I'm rushing through certain topics. This episode is already 25 minutes long. Let me know what we should be discussing. What is important to you that I should be highlighting? Because I'm trying to put as much a personal spin on these topics as possible, and I hope it's valuable. So thanks so much for tuning in. Don't forget to hit the like and subscribe button, and have a great weekend.